Hello everybody, it's Dean Barber, founder and CEO of Barber Financial Group. Welcome to 2021. 2020 finally in the rearview mirror. What a year it was. I want you to stick with me here for just a few minutes as I recap 2020 economy, 2020 markets, and we take a look at what is ahead for 2021. All right, 2021, welcome. Glad you are here. I'm glad all of you are with me. I hope you're all staying healthy and safe. I am doing this recording from Florida, where I will be working remotely for the month. So if anybody needs me, obviously you know how to get in touch with me through the office. But as I sit here on the 4th of January and reflect back on 2020, there were some pretty amazing things that happened in 2020. I'm going to peek at my notes here as I start to go through some of this with you. So, first of all, we had home prices increase by 8.4% in 2020. That's the fastest increase that we've seen in home prices since 2014. We also saw the fastest peak-to-trough drop in the market ever. 3 times as fast as the 1987 peak-to-trough drop in the stock market. In just 33 days, starting on February 19th of 2020, the stock market lost an astonishing 34%. Now, as you all know, the markets recovered nicely, and this is one of those times where you have to really start to step back and understand that the market is more of a leading indicator as opposed to waiting for the economy to recover and then the market follows. Typically, the market leads us out of the recession. Not that the market physically leads us out of the recession, but as we start to see the market recover, that gives us an indication that the economy should start to recover. We did end the year with unemployment back down at a very low number, just above 6%, and we have a new administration coming in here in January, and so there's a lot of things that are going to be weighing on the market as we move forward. We're going to talk about all those, but before we get to what do we think about 2021, let's talk a little bit about the recovery in the market in 2020. I want to talk to you about where it came from, what we think is ahead today. I want to talk about where stock prices are, or the valuations of the major indices, and where they are right now from a historical perspective. So let's get started here with a little bit of what's going on in the markets. All right, we're going to start off with a 1-month time frame. So what we're looking at here on the left side of my screen here, you can see I've got everything from Russell 2000 all the way down to the Dow Jones Industrial Average, and I just sorted these by the return for the month of December. And talk about a Santa Claus rally across the board. We had some phenomenal returns in the month of December. So Russell 2000, the very best index for the month of December, up 8.31%, followed by the S&P 600, S&P 400 mid-cap. So this is the small cap 600, by the way. At the very bottom, we had the S&P 500 up by 3.26 and the Dow Jones Industrial Average up by 3.09. And you can see a little graph of those over here to the right. If I expand this out over a 3-month period, take a look at what happens here. In the last 3 months, the Russell 2000 up by nearly 31%. The S&P 600 small cap up by nearly 31%. The S&P 500 up by 11.64, Dow Jones Industrial Average up by 10.19, and then I threw the QQQ in here, which is the NASDAQ 100, up by about 13% over the last 3 months. I'm going to back this up again to a 6-month time frame. Over the last 6 months, you still see the Russell 2000 and the small caps leading the way. And if you looked at this and you look just at the last 6 months, you'd think, my goodness, the small caps were the place to be in 2020, but not so fast. If I back this up and look at a year-to-date number, check this out. From a year-to-date perspective, look what's down here at the bottom. S&P 600 small cap, Russell 2000 wound up here in the middle. So think about this for just a minute. If over a 6-month period, backing up here, The Russell 2000 and the small cap was up 37 and 35% respectively, yet year to date, they wound up the small cap up only 9.79 and Russell 2000 up 18.34. That means that all of the gains in these indices for the year came in the last quarter of the year. Now, many people were very skeptical about the fourth quarter of this year. Of course, we had a very contentious election. There was a lot of drama over COVID-19 and the pandemic, and rightly so on both of those cases, actually. And so a lot of people were nervous. Well, what happened in the fourth quarter? We had a Biden victory, and then we had a vaccine, and not just one vaccine, but multiple vaccines for COVID-19. Now, the rollout of the vaccine has not been as fast as what anybody had hoped for. However, when we take a look at what the market's doing today, I have to say that I believe that the majority of why the market is moving ahead as fast as it is has to do more with the vaccine than it does with anything in our political landscape. So if we think about what's going on with the with the COVID vaccine right now, and I've said this for the last 2 months, and I'm going to continue to repeat this because it's the truth. The truth is that you and I, the consumer in the United States, we hold the power to fuel this economy. It's what we do on a daily basis. It's how we live and what we spend that drives our economy. 70% of our gross domestic product, or GDP, is consumer spending. And then about 15% is corporate spending, and another 15% is government spending. So the reason why the markets have taken off as fast as they have is because there is hope that this vaccine will allow the consumer to get back to a normal life, to get out and travel and go out to eat and go out and go shopping, all the things that you and I want to be able to do. And so many of you that I've talked to throughout the year that have just said, gosh, I just can't wait to get back out. And there is a lot of pent-up demand out there. I mentioned earlier that home prices up 8.4% for the year. Check this one out. We have a home sales, let me find my notes here, home sales up 16% in 2020. In the greater Kansas City area, most homes that are up for sale are being sold within weeks, if not days, and most of them at higher than the asking price. Now, a lot of that is fueled by what I'll call our best friend right now, and the best friend is the Fed. Think about the interest rates and where they are today, and that'll give you a lot of the story of why home prices are moving up and why home sales are up. But that's only part of the equation. The other part of the equation is the millennial generation actually starting to form families and buy homes. So I think that that phenomenon is going to continue. And when you keep in mind that the millennial generation is now, by population, the largest generation in the United States today, as that generation continues their family formation years, continues to have children, we will see that part of our demographic continue to fuel the economy. So as we look into 2021, a couple of things to note. If you had a 60-40 stock to bond mix January 1st, chances are today that you have far more in stocks than 60% because of what the markets did. You need to go back and take a look and reassess where you are from a risk perspective. Right now, here on January 4th, markets on average are at about a 42% premium to what is their normal price to earnings ratio. Now, that in and of itself is not scary if in fact the vaccine takes hold and things do as well as what everybody's thinking is going to happen and the consumer gets back out and starts to live their normal life. If, however, we wind up with another strain, and another different strain, and another different strain, the vaccines prove to be ineffective, and we can't get a grip on this COVID, and we have Fauci and Biden saying we got to shut down the economy again, then I think that we're going to see more volatility. I think we're going to see another market pullback if in fact something like that happens. But the markets right now are optimistic that the vaccines are going to work. We also have to keep in mind, remember I said the Fed was our best friend. As we think about what the Federal Reserve did in 2020, they provided liquidity. They were the buyer of last resort for the bond market. They were flooding the economy with liquidity. We had all kinds of different stimulus packages. I believe that we'll see another stimulus package where the fight over the $2,000 stimulus check turned into a $600 stimulus check because the Senate and the House can't get along. They both can't agree on where that money should go or how it should be tied to different things that they want to put in, which I think is a whole nother conversation altogether, not for this particular video. But when we think about that, we've got a Fed and a government willing to support the economy, willing to keep it out of a negative type situation or a recessionary type of situation. And so with the support of the Fed, that should give the market what it needs. And that doesn't mean it's going to be a straight line. It doesn't mean we're going to see a first quarter resemble the fourth quarter. That would be kind of unprecedented, actually. I expect that we're going to see things in a choppy trade here early on in the year. There's a lot to be said for what's going to happen with the new administration. Will there be immediate tax increases? Will there be additional regulations put on businesses and small businesses, which could hamper growth? We don't know any of these things. It's going to be an interesting year as 2021 unfolds. My prediction is this: if in fact the vaccines are effective, we will see positive results in the equity markets for 2021. It won't be a straight line. I don't expect anything like what we saw in 2020, but of course nobody expected 2020 to do what it did. Nobody expected the vaccine. Nobody expected as fast of a recovery in the stock market as what we saw. So as everybody knows, you can't try to guess what the markets are going to do. What we can do is always step back. We can take a very pragmatic and educated view of everything that's happening and do our best to try to make sure that you're in the position that you need to be in. And don't forget that we invest so that you can live your one best financial life. We can't look at this from a standpoint of greed and just how much money can I make. We have to look at it and make sure that your money is doing for you what it's supposed to be doing. I encourage you to always keep the dialogue open with your financial advisors. Here at Barber Financial Group, let's get that plan updated. Let's make sure that we're heading into 2021 with our eyes wide open. And like I said earlier, maybe we want to take a look at rebalancing. Maybe we want to take a look at your risk profile. Take a look at maybe some of the winnings that were out there in 2020, taking some of those off the table, setting aside a year or so of income from some of the gains that were made. All things are possible, but it requires great communication between you and us. Here's to hoping that 2020 never repeats itself. I do hope that everyone had a very great holiday season, and here's to a great 2021. I'll be talking to you in about a month. For all of you viewing us on social media or YouTube, make sure and follow us and subscribe. And for more videos just like this, check out more on our YouTube channel or barberfinancialgroup.com.